Hello, hello, hello. This is Colin Brown here from Embolden.com. Hey man, I have something for y'all today. It's another edition of Wise Word Wednesdays, where we break down financial and credit information so we'll be out here making better decisions. Real quick, if you don't know, my name is Colin Brown. I am the founder of Embolden Solutions LLC, which is a credit restoration company that helps people meet their goals, whether that be start a business, get into that brand new car, get into your dream home, start a business, but whatever the case is, whatever your goal is through credit, we help you achieve it. So enough of all that though. Let's talk about the 5 best ways to invest your tax return. Because we know, if you're anything like me, when you had a tax return, or when you're going to get your tax return for this year for 2020, if you don't think about it beforehand, you may blow it. Let's just be real. Let's be honest here. You may blow it. You'll look up, and what happened to my tax return again? You end up spending it on some things that you don't need necessarily. You won't, but you don't necessarily need. And it happens. It can happen easily. Again, if you don't tell your money where to go, it'll fall right out of your pocket. You know what I mean? We have to have direction with our money. So y'all let me know if y'all can hear me right now. Give a reaction, thumbs up, wow, whatever the case is. Let me know that y'all can hear me so we can make this happen. I want to be talking to myself. Y'all let me know if y'all can hear me. Anyways, so let's get back to it. Like I said, 5 best ways to invest your tax return. This is very important because money is an asset. Cash is an asset. You have to invest assets if you want to bring in more assets and not spend money on liabilities. All right? All right. So number 1 is save your home down payment. All right. So if you're looking to get into that new home here in 2020, then you more than likely are going to need a down payment to get into that home. As I've said before, there are some programs where you don't need a down payment, but most of the time you're going to have to pay some. Even if you don't pay a down payment, there are going to be different costs involved, like the closing costs, things of that nature. But even if you don't have that, you want to go in with some money, right? Just in case you need to fix some things up in there, or just whatever the case is. So you can use that tax return instead of, just blowing it, going out to the mall, wherever you go at, which I'm not saying anything wrong with spending your money. Just saying, we want to allocate it to things that we need. You can put that money in a savings account somewhere where you can't easily access it, and then you can save for your home down payment. Now you don't have to worry about it, or at least, I don't know if that's going to be all of it, but you can at least put a dent in it. If not, you know what I mean? So that's one wise thing that you can do with your tax return. All right. All right. Okay. Number 2 is pay down high interest debt. First thing I want to say here is I am not referring to going and paying off collections on your credit report. Do not do that. All right. Unless you want to waste money, then, be my guest. But if you don't, I would not do that. I would highly suggest that you not do that. We're going to talk about that again. I've already done a live on that, but a long story short, if you do that, if you go and look at everything on your credit report, say, oh, this is charged off credit card, this medical collection, this collection from Comcast, whatever. If you go and pay that, it's not going to necessarily fall off of your credit report. So you're going to be paying it just for it to say paid in full. Okay, so I'm not talking about, when I say high interest debt, that's why I put high interest debt instead of debt, because I don't want your mind to think, okay, and he's talking about some stuff that's on my credit reports. No, no, no. I'm more specifically talking about things like credit cards. Okay, so if you have a revolving balance on your credit cards, then that could be something that you do with your tax return. You go in and pay that down. And why would you do that? Because when you're getting charged interest every month, that's extra money. It may not feel like it, but it's extra money that you're paying. So when you pay that credit card down, it's like giving yourself a raise. Who wants a raise? Somebody comment, let me know. Who wants a raise? I know I'll take a raise. You know what I mean? If your job came at you and said, hey, would you like a $10 per hour raise or $10,000 per year salary raise, I bet you say yes. So you can give yourself a raise. If you have high interest debt, you could just go in and pay some of that down to the best of your ability, and now you're giving yourself a raise. All right. All right. So that's number 2. Number 3, y'all knew this was going to be on here, right? Restore your credit. Do I even have to explain this point? Look, man, making the initial investment is going to save you a lot of money in the long run. I know it's hard to think like that when times are harder. If your credit is already low, you're like, man, forget it, I don't need it. You're going to need it. You need it now, but you're going to find yourself in a situation where you're like, wow, I really need to use my credit. It would be great if I had a high credit score so I won't be paying a lot on interest every month for that car, for that home, whatever the case is. So I won't have to pay a huge deposit on my new apartment. Again, whatever the case is, you need to have great credit, okay? You need that. Don't play with it. So instead of blowing your tax return, why not just start on your credit right now? Why not just start working on your credit right now? You know what I mean? I've done this, okay? So when I first started repairing my credit, man, what year was that? 2012, 2013, whatever year it was when I really got serious about my credit. It was me using my tax return. I got a tax return that year and I was like, you know what? I'm about to do something about my credit, man. I'm about to do something about it. So I invested in my credit, and then from there on, it just built and built and built and built and built. And now I'm at where I'm at now. All right. 100K in credit cards above a 720. Pretty much get what I want. And that all starts with investing into yourself, investing into your credit. Okay. If you don't know where your credit is, you're already, on the losing side of the race, just to be honest with you. If you haven't invested into your credit before, more than likely it's not where it needs to be at. But you need to at least have a professional look over your credit reports with you. Okay? If you're hearing this right now and you need someone to look at your credit reports to see what you need to do about your credit, don't wait. Go ahead and do it now. You can set up a consultation for free. We can take a look at it, get a game plan for you, and put you on the right track. All right? And again, if you're hearing this and you set up a consultation today, which is January the 8th. Yeah, January the 8th. And I have something for you. I'm not even going to tell you because I only want serious people. I'm not going to tell you what I have for you. You just going to have to find out. Take action. All right? And you need to do it anyway. We would do a lot better in life if we just did the things that we said we need to do. Not extra stuff, not stuff we don't even know about, just stuff that we already said that we were going to do anyway. Anyway, I don't want to get into a rant, but y'all knew this was going to be on here anyway. So that's number 3, restore your credit. Number 4, start or invest into your emergency fund. All right, so what is an emergency fund? Emergency fund is a fund with, well, it could be however much you want in there. Typically, it's either people start at $1,000 and then they put, once they have that 1,000, they'll work on putting 3,000, I mean, not 3,000, 3 to 6 months of living expenses in an account that they don't touch, that they keep there just in case of a rainy day. You know, your car accidentally, well, not accidentally, but your car suddenly, I meant to say, breaks down on you. You have a sudden medical emergency. You have to, you know, help out your family. Say you lose your job unexpectedly, they just shut down. You had no control over it. Whatever the case is, these are times where you want an emergency fund. You want some extra cash that it isn't already allocated to something else, which actually helps you from going into debt where you have an emergency fund. So say you like, oh man, I already restored my credit. I don't have any high interest debt. I'm already in a home, but you don't have an emergency fund. That could be something for you to, again, start if you haven't started it, or put more in it if you have already started it. And again, this emergency fund, that's $1,000. Most people start out with $1,000 just to get some momentum going. And once you build that, you want to look at 3 to 6 months of living expenses. What does it cost to be you for a month? Multiply that by 3 and see how much it is. And then try your best, which you can do. I'm saying try your best like it's something you can do it. And put that money in a savings account that you don't readily have access to. I would do an online savings account, which has a high amount of money that they pay you back versus, so when you have a savings account in a bank, just a regular savings account, you'll notice you barely get anything on there because the interest rate that you get is so low. But when you do an online savings account like Barclays or Ally or Capital One 360, you can look these things up. You get more money returned to you if you just have your money just sitting there. Okay, they're gonna pay you just to have your money in there. So anyway, your emergency fund, that's something that you want to invest into, okay? Because rainy days are going to happen. You know, some of us have more than others or whatever the case is, but you know, unexpected things happen in life. Sometimes we feel like we're just unlucky in things of that nature, which can be true. I'm not saying it's not, but sometimes we're just unprepared. Sometimes we're just not as prepared as we should be for whatever the reason is. Sometimes you can't help it. Sometimes you can help it. So this is one of the times where you can help it and you can do something about it. You know what I mean? You just got to take action. Give your money a purpose of where it needs to go instead of just it controlling you and telling you what to do. You tell it what to do. All right. So number 5 is start a business fund. This is one of my favorite ones too. So you think about starting a business, you have, you know, an idea or whatever the case is, put some money back so you have something to start with once you start your business. So I also did a Facebook Live about how to start a business and what to look for when you want to start a business. So you guys can actually look back at that if you want to. But if you have an idea, you know, basically A business is either a product or service, someone else's product or service that you may be using to help solve a problem. So what skills do you have that you can help solve a problem with? Like again, my main business is Embolden Solutions, where we help restore our clients' credit. The problem is that they don't have the credit up to this point to achieve the goals that they're looking to achieve. So we fill in the gap there between where they are now and their goals. We come here and we help solve that problem. So think about a problem that you can solve, or a product that you can deliver to make someone's life more enjoyable. So, there's many different things out there. Just look it up. If you have interest in starting a business, maybe y'all already knew all that, but just in case, I'm just throwing it out there. You know what I mean? But this is a great time to start a business, okay? Because now that you have the internet, even though it's easier to start promoting a business, but at least it's free now to promote your business. You know what I mean? It's free to study, to learn your business better. Now it's gonna cost to in many different areas to improve yourself, but still the main stuff, the initial things you can do for free on the internet. So, excuse me. So it's a great time to start a business. And you're going to have all type of costs down the road. Initially, you shouldn't be spending that much. Should be making money first before you start trying to blow a whole bunch of money. But either way, you can start a business fund, man. Start a business fund. So I think that's very, very important. All 5 of these things are great uses of an increase, like a tax return, if you're getting one. Of course, everyone doesn't get tax returns. I'm just talking to you if you get one, if you're going to get one. So let's go over the 5 things again. Number 1, save your home down payment, because typically you'll be looking at 3.5% of whatever your home is. If that's $100,000, $3,500. You can already either have all of it or at least put a dent in it. So you want to save that. If you've already done these other things, do that. You're looking to get to a home, that could be one way to invest your tax return. 2, pay down high interest debt, which is credit cards. We're not talking about collection accounts. All right, I want to be very clear on that. I'm not talking about charge-offs and collection accounts. I'm talking about credit cards, which typically have an interest rate of 17% or higher, all the way up to like 30%. All right. So 3, restore your credit. This is going, and I use the word invest because you do these things now, it's going to benefit you later on. That's what an investment is about. Dig it in now so you can see the returns later. All right. So restore your credit. Number 3. 4, start or invest into your emergency fund, your rainy day fund, just in case something happened fund. Where did this come from fund? All right. So that's number 4. You can put money into that if you get a tax return. Number 5, start a business fund. So if you have not started a business, or hey, you have a business already, you can invest that back into your business. Okay, that's the best. These are literally some of the 5 best ways to invest your tax return. Of course, there's others. This isn't the only thing you can do, but these are some of the most impactful things you can do that you can see a return in 6 to 12 months, easy. So the time is going to pass by anyway. You might as well be doing something about it in that time. So that is pretty much it. Does anybody have any questions or anything? Look, Rodriguez said, most definitely, yes, yes. Chantrell said, let's get it. So important. Yes, 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 yes. So that is pretty much it. If you guys have any questions about any of these 5 points, you have any questions about credit, feel free to let me know. Just comment down below, even if you're watching it on the replay, which most people do. It's okay. And just let me know, okay? And that's it for today's edition of Wise Word Wednesdays. And until the next time, peace.